Ladies and gentlemen, good day and welcome to Q4 FY22 earnings conference call for Action Construction Equipment Limited, hosted by Phillip Capital India Private Limited. As a reminder, all participants' line will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. This conference may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not guarantees of future performance and involves risk and uncertainties that are difficult to predict. I now hand over the call to Mr. Vikram Suryavanshi from Phillip Capital India Private Limited. Thank you, and over to you, sir.
Thank you, Hemant. Good afternoon and very warm welcome to everyone. Thank you for being on a call of Action Construction Equipment Limited. We are happy to have the management with us here today for question and answer session with investment community. Management is represented by Mr. Saurabh Agarwal, Executive Director, Mr. Ranjan Luthra, Chief Financial Officer, and Mr. Vyom Agarwal, Head Investor Relations. Before we start with the question and answer session, we will have opening comments from the management. I will hand over call to the Mr. Saurabh Agarwal for the opening comment. Over to you, sir.
Thank you, Vikram. Good afternoon, everybody, and welcome to this earnings conference call for the fourth quarter and financial results for the year ended March 22. Last financial year was yet another extraordinary year. We had the impact of COVID second wave in the first half, a strong rebound thereafter, and a macroeconomic headwinds because of war and rising inflation by the time we ended the year. At ACE, we took these uncertainties as opportunities to gain market share, and we made significant progress on our strategic priorities. This has been possible through the collective efforts of our employees and partners who serve the needs and aspirations of our customers. Along with me today in the Concall, we have Mr. Ranjan Luthra, who is our CFO, and our Head of Investor Relations, Mr. Vyom Agarwal. I hope you all have had an opportunity to look at the company's financial statements and earnings presentation, which have been circulated and uploaded at the stock exchanges. To begin with, it gives me immense pleasure to report that we have crossed the rupees 1,600 crores turnover mark in this fiscal and also recorded our highest ever sales in the quarter gone by. Our growth of 33% was significantly ahead of the market. We consistently grew our brand and gained market share in the last year. Our EBITDA margin for the year was sustained at 10.3%, and we delivered a performance of balancing growth and profitability in the backdrop of extremely challenging inflationary scenario. Our EBITDA for the year grew by 24.3% to approximately 168 crores, as against rupees 135 crores in the preceding year. We were able to increase our profit before tax from about 108 crores in FY21 to approximately 138 crores in FY22, which is a growth of 27.5%. Similarly, our PAT also increased from rupees 80 crores in the last year to rupees 106 crores, thereby registering a growth of 32% in the last year. So briefly on the financial performance of fourth quarter of last year, the operational revenues grew by 11.8% on a year-on-year basis to approximately 512 crores. Despite the unprecedented inflationary pressures, your company was able to sustain the EBITDA level of 10.4% and PBT at 8.8% in the last quarter. The EBITDA and PBT for the quarter stood at 53 crores and 45 crores respectively. Now moving on to segmental business performance. For the year gone by, our crane business has registered a strong growth of 40%. The growth was both in value and volume terms. Our numbers for cranes increased from 4,558 in FY21 to 5,328 in FY22. In the crane segment, we have been able to sustain our margins at around 12% under hyperinflationary scenario. Further, the construction equipment segment clocked a yearly growth of 32%, and we did a revenue of 172 crores with sustained margins of around 5 to 6%. The metal handling segment recorded revenue growth of 48% and stood at 152 crores with margins at 12%. The agri division registered revenue of 198 crores while recording margins at 6.5%. The tractor industry remained subdued in the second half of FY22. The outlook remains positive due to good crop prices and prediction of normal monsoon going forward. On the operational side, in our endeavor to closely and effectively work with the Ministry of Defence, we have started executing the pilot order of 4x4 multi-purpose tractors along with special attachments which have been specifically designed for the Indian Army. Further, the operating environment remains challenging. Commodity inflation continues to be a significant headwind for the industry. The recent global developments have added further volatility to commodity markets and have pushed the prices of various commodities including Brent, steel and allied metals to an all-time high levels. CPI inflation has also been increasing. It has now reached the RBI threshold for last 3 months in a row, thereby encouraging an interest rate hike by the central bank. In such a challenging macro environment, robust performance of the company is reflective of our strategic clarity, strength of our brand, and our execution prowess, along with our agility and adaptability. Looking ahead, in the near term, operating environment will remain challenging, but we expect to see some moderation in the inflationary pressures due to recent government actions regarding steel duty structures and fuel, etc., which should enable us to expand our margin profile in the second half of this year. Having said that, the drivers for value creation at ACE remain same. We remain focused to deliver on our growth agenda, growth that is consistent, competitive and profitable. We will try and continue to manage the delicate balance of ensuring competitiveness of our brand and keeping EBITDA margins in a healthy range. We will continue to drive cost savings harder and take calibrated pricing actions whilst ensuring we protect and grow our markets. Further, with the continuous focus of government on infrastructure development and their efforts to strengthen the manufacturing sector, we do expect a growth of at least 15% in crane segment in the coming years, along with 20-25% in the metal handling segment. For our agri and construction equipment portfolios, we are looking at growth rates of around 15 to 20% and 30-35% respectively. On the whole, we are looking at a 15 to 20% increase in our top line for FY23 with better EBITDA margins. We hope we are in a position to revise these projections by end of second quarter, which will predominantly depend on how the economic scenario pans out post the recent disruptions. Further, we remain optimistic about the medium to long-term prospects of the company and believe that our building blocks are firmly in place and are on path of sustainable growth in all the 4 segments where we operate, leading to expansion in top line, bottom line and margins of the company. With this, I would like to open the call for question and answer session. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question comes from the line of Himanshu Upadhyay with Q3 Securities. Please go ahead.
Yeah, hi. Congrats on good set of numbers. See, I had a question on construction equipment. Can you break this 533 what we did in what was backhoe loaders and what was others? And again for FY21 also. And what we are seeing is significant amount of capex being announced. Okay. So what are you seeing on both construction equipment and cranes segment? Any thoughts on that? And your order books type of situation or inquiries?
Yes. See, with respect to capex and construction and activity, I think it is in full swing, and things, especially in April, were looking very good. Yes, they slightly subdued in May, primarily because of people start looking at stock markets and with RBI increasing some interest rate. So there is a small breather in the month of May, but I think April was very good, and we are sure this breadth will continue. With respect to detailed breakdown of that number, I think Luthra Sahab, with respect to the numbers for construction equipment segment, product-wise, if you can just provide that.
Sir, I will tell about the volume-wise. So backhoe loaders, we did about 466 backhoe loaders we have done it. And piling rig, we have done 29 numbers. Compactors, we have done 28. Motor graders, 9.
Okay, 466 backhoes.
Yeah.
And total is 5?
Forklift comes in the material handling. Forklift
total, what is the total of CE? 5.
The total number is of all these volume-wise is, I think we given this in the presentation also. 5.
Yeah, so that is 533. And
Yeah.
Similarly, can you break for FY21? So what growth have we seen in backhoe loaders? Because that was one of the special emphasis for the company. So that is what I am trying to understand. And what is happening in that segment? Because that is the large market also, and we have been focusing on that segment. So this 466 is versus what was there last year?
If I am not wrong, last year the numbers were 500.
That's
For
right.
backhoe loader.
Yeah, last year they were 500. There's a small degrowth there. Very unfortunate. The industry for backhoe loaders has degrown by about 28-30% in the last year. And unfortunately, because of that BS4 becoming prevalent in the second half of last year and the pricing and inflationary, so there has been a slight pullback in the overall market. And like I mentioned, the overall market has also gone down a little. We could have still done better, but I think we got stuck at this number. But on the whole, everything seems to be in place. And the numbers in this segment are also appearing to be less because with respect to our BS4 soil compactors and motor graders, again there was a delay with which we could bring it into the market. So the numbers there are again slightly reduced, but I'm sure we'll more than make up on the whole in this year. And in any case, on revenue front in this segment, we have been able to grow by 32% in the current year.
Okay. And the number of dealers who would be selling our backhoe loaders would be how much currently versus last year, and what further penetration or on distribution side we are trying to do?
See, now we are trying to reach each and every corner of the country. I don't have the exact number of dealers between last year and this year, but I can for sure tell you that at least 15 to 20 more locations have been added in this year which has gone by. And it is a continuous process, so hopefully by end of this year, the current FY23, we should be in position to be offering this machine in every nook and corner of the country.
How much would be our distribution reach versus the market leader? Or number of distribution points?
About 70-80% of the area. But the only difference is that the market leader again has further lot many outlets as compared to us, even at smaller city levels. So this process, see, every state we will have main dealerships which we have in most of the areas, and in certain bigger states maybe 3-4 dealerships, and they keep on increasing further outlets so that the touch points keep on increasing. So our current touch points would be a little over 100 with respect to backhoe loader, which I think in this year again we should be increasing by about 40-50 more.
Okay. And one thing, on the cranes side, we saw pretty significant growth rate. Do we think it will continue, and what product is driving this growth? And what is the scenario?
We are market leaders in pick and carry cranes with now close to about 65% market share. And tower cranes again, which is a little more than 65%. So these two are the leading product segments within the crane, where we do our maximum numbers. I would say 97, 98, 96% of our numbers come from these two products. And going forward, I'm sure that this year is going to be better than last year. And as I mentioned in my address, we are looking at least a 50%, 15% growth here in numbers. It can definitely be much more than that. So, but a prudent time to project that would be, I think, another 3-4 months down the line. Because on the whole, with respect to infrastructure activity in the country, and also the focus that the government has on manufacturing, and pick and carry cranes are used in both. So I think we are on a very good slate with respect to the demand coming up. And luckily in the last year, real estate segment has also started to pick up. So the numbers of tower cranes are also increasing, which are definitely higher ticket size as compared to pick and carry cranes.
Till what height do we make tower cranes?
See, we can, currently what we are doing is, maximum required in the country is about 230 to 40 meters cranes which we are doing. But yes, if people want to go higher than that, then special solutions can be provided for 300, 400 meters also.
Okay. Okay. Yeah, thank you from my side. I'll join back in the queue.
Okay. Thank you.
Thank you. The next question comes from the line of Jasdeep Walia with Newmark Capital. Please go ahead.
Hi, sir. Thanks for taking my question. Am I audible?
Yeah, sure. Yeah, you are.
Sir, you've been mentioning over the last few quarters that you wanted to close an acquisition, and as per your comment in the third quarter call, you said that you will definitely close something by fourth quarter, which is the quarter just gone by. So could you just update us with the status with respect to M&A on the M&A front?
Yes, we were very hopeful that we will be able to do it in the last quarter. Unfortunately, it has trickled into this quarter. So if everything goes well, 100%, I think we are on track to be able to announce something. Both of these acquisitions we are looking at are smaller ones, based on our philosophy to consolidate the market at the lower end. And I think over the next 15, 20 days, 30 days, we should be in a position to close and announce. Yes.
Got it, sir. Sir, like you just mentioned, you want to consolidate the market at the lower end. I guess you mean that you want to acquire companies with, let's say, 2 to 5% kind of market share in the crane segment. Sir, to me, the rationale is not clear because the market is already consolidated with top 2 companies having more than 80% market share. And if I go back, let's say 1.5 years, you yourself used to say on the call that you don't bother about competition from smaller companies in the crane segment because they have insignificant market share, and every couple of years some new company comes up and then it dies an automatic kind of death in 2-3 years. So why to acquire a small company in the crane segment, sir?
We are looking at a couple, rather there's another third target, fringe players, and we'll merge it with our business. The main aim is that, what has happened in the recent past, that this input commodity price increase and inflation which has been happening, sudden price movements, and we are forced to increase our prices. So there is utter confusion in this market. And the smaller fringe players end up getting some benefit there. Maybe not with their selling price, but at least with the numbers, which they are able to do slightly better in some months because, we have increased our prices. So we thought it is an opportune time to totally consolidate the market wherever possible, and which eventually will hand us more power to, price our products suitably in certain smaller regional markets. That is the main contention behind this, and obviously some numbers will get added.
Got it, sir. So, but you will acquire some small company and then, hello?
Yeah, just beyond this side, I would just like to add one more thing, that we operate in 4 segments: cranes, agri, construction equipment, and material handling. So acquisition can be in any of the lines. I think you had pinpointed cranes, so it won't be right on our part to comment on that.
Got it. Thank you. That's all from my side.
Yeah. Thank you.
Thank you. The next question comes from the line of Murdit Jain with HEM Securities. Please go ahead.
Hello, sir. Thank you for giving me the opportunity and congratulations for very good set of numbers. Sir, we have witnessed strong growth in crane segment, but there's substantial decline in number of quantities sold in construction equipment and agriculture equipment in quarter 4 as compared to quarter 3. So, sir, just wanted to know what is the reason for that?
Cranes, we have definitely done good. A, because of price increase. B, because of numbers increasing. Unfortunately, the construction equipment side, the market overall tanked by 28-30%, and especially in the second half as soon as the BS4 thing happened. So that was the main reason that in the second half we were really not able to increase our numbers and surpass our numbers by 30-40%. But nevertheless, due to our product mix, we have been able to grow that segment by about 32% in the last year, which I just mentioned. This I'm talking about the construction equipment sector, where from about 133 crores of turnover in FY21, we've been able to do 176. Yes, this could have been much better. Less, we would have been able to do some more numbers in the construction equipment sector. And something similar, I would say, with respect to the agri, especially Q4, our numbers are really not good, and they've reduced. Our revenue has reduced there on a year-on-year basis about 14-15%. So on a whole year basis, our revenue for agri is flattish, and that is the main reason, because the markets were quite subdued, and also coupled with the continuous price increase that we have been trying to take every 2-3 months in the last year. That has also reasonably destabilized the market. But I'm sure the worst is behind us with respect to these inflationary tendencies, and government taking such positive and drastic steps to at least bring the biggest commodity under control, which has been playing havoc and has more than doubled in the last 1.5 years.
Yes, sir. Yes, sir.
I'm sure going forward, things will fall in place.
Okay. Sir, my second question was regarding raw material only. Sir, in the previous Concall, you mentioned that around 60% of the input cost is of steel. And sir, recently Government of India has announced export duties and reduction in import duties of certain raw materials which are used in steel manufacturing. So sir, how will it affect our raw material cost?
See, in the month of April and early May, steel had peaked, touching about 79 to 80 rupees a kg, even slightly higher in some cases. I'm talking of MS, mild steel,
yes,
flat products. In the last 15-20 days, they have definitely reduced by about 4-5 rupees a kg, and OE prices of Tata Steel or ArcelorMittal, which was SR earlier, or Steel Authority of India, have already gone down by 4-5 rupees. And the market prices, the trader prices are already 3-4 rupees lower than that, and have been like that in the last 2 weeks. With this introduction of 15% export duty, and especially again with the 45% export duty on iron ore, we feel that there is a scope of at least 10 to 15% correction from here onwards. So the steel prices could be anywhere between 65 to 70 rupees, maybe quickly, maybe in the next 1 or 2 months. That will bode very well for us, because what has happened in the last year that we increased our revenue by 33%, and whatever operating leverage we got out of that, that was also sunk into subsidizing the machines for our customers. And even then, if you look at our balance sheet, our raw material cost has gone up by 2-2.5%. So I think in such a scenario, it should be easy for us, especially in the second half of this year, if the steel prices continue to go down, to increase our profitability by at least 2-2.5%, if not more. But this is something time will tell, because a lot of factors are involved here, because it's a supply-demand game, and who bends first. So, but we are hopeful that from the current levels of 75-76 rupees, it should go down by at least 10-15%, which will bode very good for our company. So our profitability, our margin expansion will happen. And the sacrifice in the last 1 or 2 years we have done on account of our operating leverage, which we have given away to the inflationary pressures, and our raw material cost, COGS cost of goods sold increasing. That should start to definitely improve in the next 1 or 2 months.
Okay.
Provided the steel prices go down.
Okay. And sir, my last question is, can you provide the capex guidelines for this year?
In the current year, we have already started to expand our facilities, because in the current year we intend to launch a 100-ton and a 160-ton crawler crane, and some more bigger cranes going up to 80 tons and slightly bigger in the truck crane variety, which need a bigger facility for fabrication, for machining, and even for assembly. So we have started investing in this project already. So in the current year, apart from 15-20 crores of maintenance capex, I think another about 30-35 crores should go into setting up this plant. We already have a lot of land, so we are expanding in that. Keeping in mind that India is growing as a country. Now, in the last 6-8 months, bullet train project has also, taken off very well. And so much elevated construction is happening all over the country, whether it is metro, bridges, flyovers, or increasing connectivity. So a lot of these bigger cranes, 100 ton and 60 tons, are going to be required in the country. And currently, Indian market is depending on imports, especially from China. So now to enter into this bigger crane segment and to further expand our portfolio for truck cranes and crawler cranes, we are doing this capex. So I think all in all, by the end of the year, we should be somewhere around 40 to 50 crores. Right, Luthra sir?
That's right, sir.
Okay, sir. Okay. Thank you, sir. That's all from my side. Thank you so much.
Thank you. The next question comes from the line of Abhishek Modi with Emkay Global. Please go ahead.
Am I audible?
Yeah.
Hello?
Yeah.
Thanks for taking my question. So my question pertains to the investment. If I look at your balance sheet, I think from 13 crore it appears to jump to around 76 crore, if I'm right, standalone basis, and Concall also from its jump. So can the management please explain the jump with regards to the investments?
Yeah, because the surplus money that is available with us and the cash accruals which are happening on account of the profitability increasing in the company. So those have been parked as, very safe and sound investments. And if you need any more details than that, then Mr. Luthra would be the right person to answer.
Yeah, you're right. But what number you're talking about? You only put long-term investment. But there are a lot of current investment also, which is 110 crore.
It's not audible. I think we'll have to be closer to the mic.
I was telling that the numbers, what you spoke about is long-term investment. But besides that, which we have got a short-term investment also, which is nearly 110 crores rupees. The total investment in the company is roughly about 200 crore plus. This is because of we want to flow our profits back into the surplus cash available and not to put in the business, and just keeping it as a safeguard for future investment, future acquisition or something like that. But we don't want to. If we become slightly loose, then this money will probably go up in adding up the inventories or data. So we don't want that as a company policy. Whatever we are earning, we are just putting into investments and all those things as of now.
So just
to not let it lose in the company, and so it will get consumed in the working capital. We want to keep our working capital well in control. So that is also the reason we are parking our money in short-term and long-term investments. This is what Luthra is trying to say.
So just what you had, one of the questions was asked earlier. This is regarding the hoping to be one of the upcoming acquisition.
Yes, the upcoming acquisitions, and obviously our capex plans, and obviously our plans to grow the company further. So this is the kitty we have in the company to use for all these activities.
And just going to my first question, this is you have put money from this is the completely operating income which is being put into long-term and short-term investment. So there is no
also the money we raised through QIP in September.
Yeah. So QIP money and this. So it is 50-50, or just to kind of course not fixed, but a broad breakup. So largely it's QIP, no? But the operating money will.
It should be close to about 60-40, right, Luthra sir?
That actually QIP money was only 130 crores rupees. And balance which is mainly used for reducing of debt also, term loan debt also. So we have become a debt-free company as on 31st March, and the rest was the flowing back of the operating profits.
So around of the total 200 crores you spoke, 130 approximate is the QIP portion, and around 60-70 crores will be the profits which the company has booked up.
Yes, but what Luthra sir is also saying that our short-term borrowings and long-term, which were standing at 54 crores last year, they also have been more or less nullified. So
yeah, I think around 7-8 crores, if I'm right, looking at the balance sheet.
Yeah, that has also been nullified. In making us not use any debt.
Fine. Okay. Yeah. Thanks for the answer. Thanks.
Yeah. Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question, please press *1 on your telephone keypad. The next question comes from the line of Kushal Chand with an individual investor. Please go ahead.
Yeah. Hi, sir. Congrats on great set of numbers. Sir, just wanted to know that, last year in the last quarter, you had mentioned that generally the run rate which we have for the entire year is what we achieve in Q4 of that particular year. So, can we expect a similar run rate of revenue of around 500 crores going forward per quarter? So as to achieve a top line of around 2,000 crores?
Whenever the economic scenario is okay or good, we are generally able to, multiply our quarter 4 into 4 and derive our upcoming revenue for the next year. And accordingly, we are giving a guideline from about 630 crores of operating revenue and 15 to 20%. So I think on a whole year basis, doing upwards of 1900 crores should be possible easily. But yes, you have to keep one thing in mind that in our business, always Q1 and Q2 are about 40% of the revenue, 40 to 45%, and second half is about 55 to 60%. So maybe Q1 and Q2 you might not see 500 crores, maybe less than that, but then that is generally made up in the second half of the year. Because 3 months are nearly lost because of monsoons. And the demand gets a little subdued in the second quarter.
Okay. Thanks, sir. Thanks. That's all from me, sir. Thank you.
Thank you. Again, if you wish to ask a question, please press *1 on your telephone keypad. The next question comes from the line of Aman Shah with GT Investments. Please go ahead.
Hello. Good evening, sir.
Yeah, good evening.
Sir, my question is, what was our capex for FY22 full year?
Luthra sir,
We did over 40 crores.
Okay. So basically, our annual maintenance capex of 15-20 crores, and over that would be the paint shop that we did?
Yes, paint shop, and we did expand some in-house cabin manufacturing facilities. Apart from maintenance capex, it has gone into the paint shop, and the paint shop work is still continuing and expanding into one of the other plants, so which will be done in this year.
Okay, and current year?
On the whole, this year we should be looking at close to 50 crores.
Okay. So, and the second is the QIP money that we have raised around 130 crores. Will this acquisitions actually take a lesser part of the QIP money, right, sir?
Yes, they will be minuscule, yes. The smaller ones.
Okay, so post that, will we be looking another acquisition or something too?
Yes. These two we have nearly lined up, and there would be another one which we are trying, so which would be slightly larger in size as compared to these two. So let's see how and when it happens in the next 2, 3, 4 months. So it's just that we are not reaching a consensus with respect to valuation with respect to that particular acquisition. So if it happens, it can go through in the next 2, 3 months.
Okay. Would you want to share like the line of activity that the potential target company?
Out of like Vyom mentioned, out of the 4 segments we operate in,
okay.
It is not unrelated, it is totally related. It will help us add value to our existing business.
Sure. It will be on the product side or more on the backward integration on that side?
There are 2 more options, one on the product side, one on the backward integration side. So, like I said, 2 smaller ones are more or less we have identified, and they are sort of done. We just need to be finalizing that. It's nearly final. There are other 2 options, so which will unfold in the next 2 to 3 months. So, rather we have 3 options, to be very frank with you, 2 on the product side and 1 on the backward side.
Okay. So, and lastly on agri equipment, basically, how do we plan to increase and deepen our engagement, and because it's actually stagnant at this level for quite some time.
I know, again in the last 1.5 years, we have beaten our teams, our financial tie-ups have even strengthened, everything seems to be in place, and we are very hopeful that although we are projecting with the segment about 15 to 20% growth in this FY23, but we should be able to do more than that, much more than that.
Okay. Thank you, sir. All the best.
Yeah, thank you.
Thank you. Anyone who wishes to ask a question, please press star 1 on your touchtone telephone. Thank you. The next question comes from the line of Krishna Agarwal with Nivesh One. Please go ahead.
Hello.
Yeah, hi.
Yeah, thank you for the opportunity. So, in the last call, you had guided that around 100 crores of defense order book you have. So, what would be the expected order book right now, and what opportunities do we see in it?
See, at the current juncture, we have a little over 100 crores of order book from defense, which will be executed in this year. And there are another 3-4 projects where we are actively working and engaged. Rather, we have close to about 120 crores, if I'm not wrong. No, sorry, I have to calculate. 110, 120 crores as of now from the defense for the current year already, which will get executed in this year. And apart from that, there are certain other projects in the pipeline to the tune of 50 to 100 crores at least. So, but sometimes it takes time in defense to realize these orders. And we have bid for another apart from this pipeline project, maybe another 150 to 200 crores of similar equipment that we do. Obviously slightly specialized to meet the army requirements. So let's see, I'm sure at least 50-100 crores of fresh business should come in this year apart from the one that we already have.
And how's the, in defense, if you get the order for like in one product, then repeat order, like how does that shape up?
See, once we have executed some orders, then within 1 to 2 years for similar generic machines which Army requires in bigger numbers, so they, provide the inflation adjustment with respect to their formula which they have set up, and if it is acceptable, then they release repeat orders. So in the current year, we are also expecting some repeat orders for certain products.
Okay. So in the coming years, we can expect around 200-300 crores of order from defense, right?
In the we already have about 100 plus.
100 plus, yeah.
And we are expecting at least 50 to 100 in this year.
In this year.
And for the about 125 to 150 at least in this year. Could be more. Orders could also be from 50 to 100. Fresh orders could also go to 150. That time will tell, because It's a slightly time-consuming process,
Yeah. Okay. Thank you. That's all.
Thank you.
आवाज गई आवाज गई आ नहीं रही
I think.
Hello. Mr. Himanshu Upadhyay, your line is unmuted. Please go ahead and ask your question.
Yeah, hi. My question was on the financing side. Have NBFCs and everyone raised rates, and at what rate the rates would have been increased for construction equipment and even cranes?
The NBFC rates for construction equipment before the RBI rate increase was anywhere between the range of 7.25% reducing rate going up to 12.5% depending on customer profile. And post this, we are hearing that another 0.25 to 0.5% rate increase would be affected by the NBFCs. So that is what is done.
Okay. And is there any mix expected to change versus customer directly buying or rental, means the proportion between people who want to rent and who want to run the equipment will remain the same, or it does get impacted when interest rates go up?
The interest rates really do not bother this, to be very frank with you. Overall, have increased in the last 1.5 years. We feel that, and what we are seeing in the past, that in the current year, it will more be of end users. There will be a little shift in the share of end users buying a little more machines as compared to rental companies, because the rental prices have gone up for different equipment in the industry, but not at par with the increase in costing because of BS4 or the commodity prices going up. So looking at that, we feel that in this year the share would move a little more towards end users buying directly, because they might not get certain equipment on rental if they are not willing to increase the price.
Okay. And one more thing, we have seen commodity prices moving up. Okay. What are our plans for exports? And some of these African countries and even Middle East are very heavily dependent on commodities. And we were thinking about growing that business, and with capex which might increase. What are your plans on that side, and how focused are we on that part of the business?
Commodities we only buy, especially steel and in different forms. We don't export any commodity.
No, I am not saying you are exporting, but the geographies are very dependent on the commodity prices. Okay. So are we seeing increased demand from Africa and some of those geographies?
To be very frank, in the last year, the demand for export was similar or muted to the year before that, although we have done 18% more revenue in exports. In the last year, we are definitely much better placed with respect to our presence in different countries of Africa, which are worthwhile, and in Middle East also.
Okay.
Right places.
Yeah, thank you from my side.
Yeah.
Thank you. The next question comes from the line of Akshay Kothari with Envision. Please go ahead.
Yeah, thanks for the opportunity. So what would be our export revenue this year?
The year which has gone by?
Yeah.
The export revenue is about close to 76 crores.
Okay.
Vis-a-vis around 64 crores of last year.
Okay. And sir, during the rainy season, how is our business impacted? Like during 2 quarters, we get some less orders, and then post that we get more orders. So regarding that?
Yeah, like I mentioned, that The first 2 quarters are about 40% of our business, 40-45%. And the second half is about 55-60% of our business. Primarily because, March is generally strong, and then it sort of tapers off a little in Q1, and then in Q2, primarily it is raining in most of the parts of the country, and the construction activity slows down. So it just gets a little subdued in quarter 2. But then in quarter 3 and quarter 4, the second half of the year, it picks up, and with the festival season coming in and the buying season coming in, so the things started to, September onwards, October onwards, they start to increase again.
Okay. For agricultural equipment also it is the same?
For agriculture, generally quarter 3 is the biggest month. You can add here with respect to agri, if you want.
This is agri going forward this quarter as well as the next quarter. It should do well because of good crop prices as well as prediction of a reasonably good monsoons. Apart from that, even in the export side, we are targeting some good geographies which will add numbers in the coming year.
But seasonality, agri with respect to tractors, I think Q4 is generally a slower month, a slower quarter, than Q1, Q2, Q3 are fast quarters, right?
Q3 is the best. Q4 is generally slightly slow.
Okay. That's great. Okay, thanks a lot and all the best.
Thank you.
Thank you. The next question comes from the line of Anshul Sehgal with Kotak AMC. Please go ahead.
Good afternoon. Thanks for taking my question. I have 2 questions. One is that on the 4 segments that we have, how do we see the mix between these segments changing over, say, the next 3 to 5 years? Which segment will become larger in size and why? And second, if I look at the last 10 years, our margins in this year are amongst the highest that we have been in the last 10 years. Of course, it has been on the back of a weak industry environment. But is this the peak that we anticipate on margins, or say 3-5 years out, there are reasons for margins to be higher?
The first part of your question, our current mix is about, cranes is about 67%, and construction equipment is about 11%, and metal handling is about 9%, and agri is about 13%. That's total of 100%. Going forward over the next 3-5 years, we feel that, and obviously on an increasing base. So when I say that certain segment, if the contribution is going down, does not mean it will not grow, but the others will grow faster.
Right.
So we feel that in the next 3 to 5 years, cranes would still be the leader at about 50%, but another 20% each will be added by agri and construction equipment especially, and forklifts will remain at 9-10%. So that is how we see it as. Okay. Because the potential to grow in agri as well as construction equipment is much more, because our market shares and our presence there is, there's a lot of scope of growth. So that's how the mix would look maybe 3 to 5 years from now. 50% on cranes, 20% on construction equipment, 10% on metal handling, and 20% on agri. And I have forgotten the second part of your question.
Yes, please. I was saying that the margins that we have seen over the last 10 years have been in this year the highest. Is this a peak, or is there likelihood that margins, because of either this product mix change or other reasons, scale, etc., that margins will be higher? Say again 3-5 years out.
Yeah. What I'll do is first I'll talk a little on the past. So 7-8 years, let's say between 13, 14, and slightly before that, and till 17, 18. These 5, 6, 7 years were reasonably slow years, and operating leverage was not playing in. We were stuck around 5, 7%, 8% EBITDA margins levels. because somehow the country was not growing and at the pace or scheme at which we were ready to service it with our fixed expenses in place. So now that in the last 3-4 years our revenue has crossed 1,000 crores and it is increasing further. So definitely operating leverage is playing in. So operating leverage alone can easily add 2 to 4% to our margins in the next 2-3 years. Or provided we are able to grow the company 20-30% every year. Apart from that, our margins as of now have been adversely affected at least 2-2.5% on account of input costs, because finally we have to ensure reasonability and viability of the end product. So whatever benefit we got out of operating leverage in the last 2-3 years, the last 1.5-2 years, and that has also gone away in discounting or subsidizing the price for our customers. Going forward, there is a clear scope of 2-3% increase in margins on account of commodity prices if they, cool off, especially steel. Coupled with our revenue going to 2,500 crores, possibly by FY24, if not FY25. I think in the next 2 years, there's a possibility that we can reach there. If that happens, then another 2-3% or maybe slightly more on account of operating margin. So there is a scope of expansion of anywhere between 2 to 4%, maybe slightly more than that.
All right. Thank you so much.
Yeah.
Thank you. The next question comes from the line of Sarika Khushia, an individual investor. Please go ahead.
Hi, sir. We have been vocal in the past that M&A activities are going to be affecting our operating margins more. So since we are pretty close to closing one,
you will have to be a bit louder and a bit clearer, please. Sorry.
Is it better?
Much better.
So should I repeat?
Yeah, please continue.
Okay. So just wanted to understand, since we are pretty close to acquiring 2 or 3 companies, what impact would it bring to our margins over and above the heavier cranes, which are definitely going to be margin accretive for the year?
Yeah, I think these 2-3 acquisitions are going to affect or help us improve margins in at least 8-10% of our business in the crane segment primarily. And we will get offended with me on that, but nevertheless. So there's a possibilities to rev it up. So on the whole, on a company basis, about 0.5% to 1% is possible with these 2 that we have lined up.
Over and above the product exchange.
Yes.
Right?
Over and above that, yes.
And the impact would be felt during the year itself.
Should be felt in the second half of this year.
Right. Thank you so much.
Yeah.
Thank you. The next question comes from the line of Anik Mitra with Walford Research. Please go ahead.
Good afternoon, sir. Am I audible?
Good afternoon. Yeah, you're audible, yes.
Thank you for taking my question, sir. Sir, like the expansion, what you are doing, like what is the timeline of commercialization this facility? This is one question. And second one is, like what sort of revenue addition can we expect post commercialization of this new facility?
The timeline would be that we want to commercialize and start producing for here something as soon as December, January. So we are already May is finishing. So in all probability it will be Q4 when it gets commercialized into production. And the revenue that can be generated from this capex that we are doing would be close to maybe about, it will be capable. The capability would be to generate revenue of 300 to 400 crores. But yes, let's say in the next year we should expect 100 crore because the capacity we are building up is more than what we will require immediately. there's no point building a small plant and then trying to increase it after 1 or 2 years. So, and most of our capacity otherwise are also fungible. So even if it is required for some other activity, it can be used. So the total capacity, let's say revenue addition possible after this about 30 to 40 crores capex would be close to about 300 to 400 crores at least.
Sir, what is our current capacity utilization?
In cranes, we are utilized about 70-75%. In metal handling, we are utilized about 75%. And for construction equipment and agri, we are utilized 30-35%.
Okay. And sir, is there any possibility of improvement in this utilization in agri segment in this year?
Yes, at least 15-20%. We are looking at increase in revenue. It can be much more. It can also be 25-30%, but we would like to peg it at 15-20%. 100% with capacity utilization will go to 40-50% in this year itself.
Okay. Okay. Thank you, sir. That was from my side.
Yeah. Okay.
Thank you. The last question comes from the line of Somnath Pal, an individual investor. Please go ahead.
Hello.
Yeah, hi.
Hi, sir. Good afternoon. Thank you for taking my question. Sir, it is good to hear that you are positive on the business and the outlook looks good. I just wanted to know, sir, what is your biggest fear that you think which you would have given the uncertainties persist? Which something which bothers you probably, or which you can share probably for the next 2-3 quarters or so?
Nothing to do with business per se. I'll be very frank. More to do with China attacking India. That is the biggest fear. Pakistan has gone to the dumps. I think China is a fear factor. God knows the way they are being pressed and oppressed all over the world. I do not know how they will react.
Okay, but I think that would be kind of a unexpected event, right? I mean, I was just trying to understand from the business perspective. Sorry. I was just trying to understand from the business perspective, do you think anything which worries you, given the raw materials are cooling and, demand is coming up and everything looks good?
Nothing really, because I think we are rightly placed. There's no fear as such. The only worry is that it has been some time we have not been able to rev up our agri business. So I think we need to work harder there. That is one worry that we have. Apart from that, I think the way our country is poised at the current juncture, with respect to the possible growth in all our operating segments, I think if we are not able to capitalize this in the next 3, 4, 5 years and maybe 10 years and become double, triple, or even bigger than that, so we would have missed an opportunity.
So it's just not in the books. You also feel quite confident and you think that this is the right time to catch the bus. Otherwise, we would miss it. Would that be the correct understanding?
We are already on the bus. We are on the driver's seat. We are market leaders in 2 of the segments. And going forward very soon, we want to be the market leader in metal handling as well, and leave our mark in the construction equipment space. And one thing very proudly I can tell you that today, after Kubota taking over majority stake in Escorts, we are out of the big 15-20 construction equipment companies. We are the only Indian company. All other are multinationals, and we are giving them a run for their money, right?
Right. So very encouraging. I will just put up a couple of more points and questions. So, sir, do you think that there is scope for any kind of cash sales in our machines and hence by improving the working capital even further? I mean, or is there any plan from the management side to do that?
See, definitely more needs to be done on our debtor side, and upfront payment sales also do happen. But I think at the current juncture, what has happened with us to further improve our working capital, that definitely for some good bad reason we are carrying a little extra inventory.
Okay.
Because the last COVID wave was there within this year, and before that we had seen a lot of supply chain problems happening. Right. So we are carrying at least a 50-80 crore excess inventory, which when things start to normalize over 3, 6 months, 9 months, supply chains totally settled and semiconductor issues settled, then perhaps we can work on reducing this.
But other than the inventory, you think the debtor and the payable can be in your
Debtors
favor?
are very well in control. And one thing that can be improved in debtor, and we are already working on it, that post the lockdowns in 20 and 21, the financiers have been delaying payments on some pretext or the other for 15-20 days. Earlier we would get paid as soon as the machine is dispatched from the financiers, but now they want the machine to reach its destination and get registered in half of the cases and then pay us. We have taken it up very strongly with all our NBFC partners and they have accepted it. So hopefully our debtors will start to improve further. But as it is, they are in sync with our traditional pattern. So even if after a lot of squeezing, I really do not know how much we can improve there. But definitely on the creditor side, because the whole of last 1.5, 2 years, from 2020 onwards, we have, we were okay paymasters. But now we have become very prompt paymasters because of two things. Because actually the vendor base and the suppliers have suffered during the COVID time. So we do not want that they go out of business or delay because of lack of payments or their cash flow. Secondly, with the commodity and the cycle increasing, input costs increasing, so the working capital requirements of our vendors have increased actually by 50%, 60%, 80% with prices increasing. So that's why you would see that our creditors for this year are, although we've done more revenue, but the creditors are less as compared to the year before that, FY21. So that is a very conscious decision we've taken to support our vendor support, structure. Because finally, these are the people who will help us grow further when we need to make more.
So very thoughtful, and I think I'll just put up a last question. So in terms of acquisition or whenever you plan to acquire, so what is the kind of ROCs or your internal IRRs, just on a rough estimate kind of?
The two smaller ones we are doing will help us increase our bottom line.
So, sorry, my point was on the cost of, in terms of, not in terms of how they'll help, in terms of finances, I mean, in the terms of evaluation at what you buy. I mean, just some sense, or what are your IRRs?
See, we are working on something even better than that, to be very frank with you. We are just, I really can't, I really don't want to give out those details, but we are hardly paying anything for that. We have sort of brought them in a situation that we are relieving them of the misery.
Okay, sir. I think sounds very good and positive. Wish you the very best, and thank you, sir. Bye.
Yeah. Thank you. Bye-bye. Yeah.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the conference over to Mr. Vikram Suryavanshi for closing comments.
Yeah. We thank the management of Action Construction Equipment for giving us an opportunity to host the call and taking time out for interacting with the stakeholders. Thank you all for being on the call.
Thank you. On behalf of Phillip Capital India Private Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines.